This is Mitch, and welcome to the 1000houses.com podcast. I'm here with Kent Ritter, and he's into apartment syndication. So that's what we're going to be talking about today. But more importantly than that, how to raise the money and how to find the funds to do these deals, which can go from smaller to very big. And so it's all about A, finding the deal, B, finding the money. So with no further ado, how you doing, Kent?
I'm doing great, Mitch. Thanks for having me.
So you're in Indianapolis, right?
Yes, sir.
All right. And you are doing apartment syndication. Give us a little background of what you were doing before real estate or how long you've been in real estate. And let's get a handle on kind of where you come from, and then we'll go forward.
Yeah, sounds good. So I started my career as a management consultant, which basically what that means is you fly around the country helping companies solve big problems that they can't solve themselves. So I spent about 12 years in that career. And in doing that, I got really good at just seeing hundreds of different businesses, how they operate, what works, what doesn't work, what levers you can pull to really impact and make companies profitable. And I think that was really just a really good kind of base for one, just knowing how to run a company, but two, just understanding investments. And with everything, as you kind of dumb it down, there's certain levers you can pull that really move that needle, and really understanding that and putting that together. So that's kind of my foundation. Into that career, I left the company I was working at with a few colleagues, and we started our own management consulting firm. So we had a boutique firm based in Chicago, grew that in over 6 years to 95 employees, about 30 million in annual revenue. And then we decided to sell that at the end of 2015. And that's what really kicked off my real estate career, because I had the capital from selling the business. And I knew I didn't want to have all my money in the stock market, but I didn't know where else to invest. And so I started looking at alternatives, and real estate really just spoke to me, checked all the boxes for what I was looking for in an investment. And I really just fell in love with it. And as I started learning more about it and the different aspects and different asset classes and ways of doing it, I really fell in love with multifamily. Felt like multifamily was the right place for me to be. It had the scalability. It had a lot of the things I like about real estate. I mean, the fact that everybody always needs a place to live, and you just make it real simple like that. You don't need a place to work. We've proven that, but you definitely need a place to live. And so I fell in love with multifamily, got a few great mentors that helped me along the way, taught me about the syndication process. And once I learned about what a syndication was, which is essentially just pooling your money together with others to go buy something bigger and better than you could on your own, that all the light bulbs went off, and I said, man, this is exactly what I want to do. And knowing that I didn't know much about it, I was new to real estate. I started out by passively investing with other people in their syndications to really learn the process and understand how it works, and be able to ask all those questions about, why'd you do this? Why'd you do that? Why'd you pick that debt? Why'd you choose those countertops versus these, and really learn the process. And so I spent really from about into 2015 to 2019, just passively investing with others, learning the process, going through some mentorship programs, education programs, listening to every podcast, reading every book I could. And then in 2019, I felt like I was at the point where I really understood this. And I felt like I knew just as much as the syndicators that I was investing with. And I set out and led my own syndication, led my own deal. And since then, we've just been really rinsing and repeating with that syndication process, buying value add multifamily, fixing it up, and giving the returns to the investors.
So how many apartment complexes have you been involved in?
So 6, and I'm working on closing my 7th right now. We actually 7 and 8 right now.
Okay, so how many of them are other people's, and how many of them are you the syndicator?
Oh, so 6, kind of 7 and 8, I'm the syndicator.
Okay.
I've passively invested in, over 15. I don't know the exact number at this point, but quite a few, probably close to 20. I mean, because that was really how I started. And in 16, where I deployed most of my capital, I went out and I invested in 10 deals just that year. And then as some of that money has started to come back, I've started to reinvest, and I'm probably north of 20 or around 20 at this point.
Okay. So like, this isn't your first rodeo. You've been through a lot. And over how many years have you been doing it?
Well, I started really passively investing in 2015. Invested in 2 deals in 15 and then really ramped it up in 16. And so really since then, and then I've been actively syndicating since 19.
Okay. So that's a pretty good track record and some good experience. And I'm sure coming from the background that you come from, you studied with some pretty powerful people and got some great knowledge that, when someone knows how to learn and how to go to the source and learn and get mentors, 6 years is like an eternity, because you're probably drinking from a fire hose a lot of those days, so.
Yeah, that's right. And I think with every step along the path, I looked at it as increasing my education. You start out kind of baseline I started out with podcasts and books, and that was how I got kind of interested in all this, and then moved it up to some paid courses and kind of went through those, and then moved up to some actual, some mentoring things, some one-on-one programs with some very high level folks. And then luckily, or not so luckily, because I was out there actively looking for people, I found some unpaid mentors too, some really high level folks who were willing to give their time because, I think they saw some potential in me. And that's been an incredible accelerator for my career, is just having these folks to be able to bounce ideas off of and learn from and avoid their mistakes. And another part I missed that I kind of glossed over was, what I kind of call my multifamily MBA was I went and worked for one of my mentors for a period of time, for about 15 months at his large private equity firm. And all they do is multifamily. They've got about 15,000 units. And so I was able to really see from the inside how a very high level institution works. And so again, that was kind of my MBA, and then went out and now able to be on my own and take all that knowledge with me. But every step has been very regimented as far as increasing my education and finding new sources to learn from.
That's interesting, because what I want to really talk about is the funding or how these things get funded, how you raise the capital, how you find the people. So it kind of goes right into this next thing. Were any of these, starting way back when you were a management consultant,
mm-hmm.
were any of those people players for you now? Were any of your mentors players for you now? Or any of those unpaid mentors players for you now?
You mean as far as are they investing with me?
Yes.
Yeah. Actually, I have a lot of my ex coworkers. I have, some of the mentors. People have definitely come along the way. And what was interesting was my first deal that I was going to raise money for. And I always tell this story because I think it's a good lesson for people to learn from. I only raised about half the money that I thought I could on that first deal. And it was really a learning experience for me of wow, this is a lot harder than I thought it was going to be. And what I found was a lot of those people that were coworkers or even old friends, they liked me. Sure, they liked me, but they didn't see me as a real estate expert. They didn't see me as somebody they wanted to give $50,000 or $100,000 to, and trust that I was going to give them a good return.
You had this other box, and this is a new venture. I don't want to go into him on a new venture. Let's wait till he's done, a bunch of these.
Well, that's exactly right. And so the reason I wasn't as successful is because I should have started 6 months earlier talking with them about what I was doing and learning about all the real estate and educating them about all that I was doing and learning. And I wasn't doing that as activists. That's what I tell people now. I'm like, look, if you want to raise money 6 months from now, you need to start today, and you need to start educating people on what you're doing and bringing them along in that process. So that it's not when you call and say, hey, I've got a good investment, they're not like, what are you talking about? They're like, oh yeah, we're ready for this because you've been educating us along the path. And so, but what I did see was, so that first one was a little rough. We ultimately got there, but it was a lot harder than I thought it was going to be. It was probably deal 3 and 4 where all those people who are sitting on the sidelines started to say wait, what are you doing now? And oh, that's working. Okay. And then they all started. So those are the deals where I had a bunch of friends and family come in because they're like, oh, well, maybe Kent's not just a guy I played football with or somebody I got beers with, on Saturdays or whatever, maybe he actually knows what he's talking about and this thing actually works. And so it's just funny. I thought that was funny how I saw in those 3 or 4 deals, kind of this influx come in from the friends and family as I've proven it out.
Yeah, I just wanted to make sure that you weren't going through a phase.
That's right.
That you were in it for good.
Yeah, exactly.
So tell us about syndication. How much money have you had to raise, and how do you go about raising it?
Yeah, good question. So I've raised right around $9 million over the past really 2 years, really in earnest, probably 18 months that I've really been going hard at it and doing deals. And where does it come from? Well, I mean, it comes from all different places, but I have my own podcast, which is Ritter on Real Estate, which Mitch, you've been on, thanks for coming on. And so that's a great source. It gives people a chance to get to know who I am and my personality and gives me a chance to, I think, share some of my knowledge and my expertise. And so that's a great source. I go on a lot of other people's podcasts. That's another great source. That's kind of what I've chosen as my vehicle to get out in front of people is podcasts. There's a lot of ways you can do it. You can write a blog, you can write books, you can, there's many ways. But and I think if you're going to raise capital, you have to have something that allows you to be out there in front of folks. You can only have so many one-on-one conversations. It's not scalable. You've got to create these like one-to-many relationships where I can do a podcast and folks can listen to that podcast for years to come. And so I think if you're raising capital, that's critical.
Yeah. So, people ask me all the time, like, if you're so successful, why are you doing podcasts? I said, well, for one, I get to talk to some really smart people, and if you're either growing or you're shrinking, there's no neutral. So right. I stay engaged. And then the other thing is I get to talk to the masses, and some of those people out there in the world that I've never even met have an interest in what I'm doing, and they'll raise their hand and they'll call me and we can get conversations. And, I've raised $26 million to buy my little houses and sell my little houses. Today, I'm, buying ranches and subdividing ranches and kind of, moved it to another level. Yeah. And it doesn't happen overnight. I've been in the business 27 years. I could have raised it a lot faster, except for my limiting beliefs. Yeah. And I could have gotten the terms I really wanted a lot earlier, except for my limited beliefs. And finally, after all these years in the business, I've broken through all the limiting beliefs, and I know exactly, basically, that there's someone out there for almost anything you want, as long as you're being reasonable and the deal holds water. You know what I mean? Like the deal's got to be solid, right? You can't sell shit. Yeah. No one wants to do that. But, so if you got real deals and you just need to ask for the terms or preface it the way you want. And if you can reach enough people, there's people that are out there looking for something to do with their money, and they just don't know you exist. They might not even know these angles or these opportunities. So we're out here trying to educate people for a lot of different reasons. And I've borrowed money now from, I don't know how many people I've never met in person. I've talked to them on the phone. We've emailed back and forth, and my office has sent them all kinds of data to substantiate my deal and all this stuff to help them. But, like I said, finding a great deal and getting it under contract and then finding the funds, that's pretty much what real estate revolves around, If you want to boil it down to the two things you got to have the deal and you got to have the money.
That's right. And you got to have them both at the same time, which can be a difficult thing. Sometimes
a little bit of a timing problem, right?
Yeah. You got the money because you just met some new investors and they're hot and ready to go, but you don't have a deal, or you got a deal and you haven't kept your investors warm, which you constantly have to do. That's another great tip. It's like, if you, like, somebody that you've talked to within the last month, I think is exponentially more likely to invest with you than somebody you haven't talked to in 6 months. That's been my personal experience. It's like, if I let that relationship go and I don't talk to that person, and then the next time they hear from me is, hey, got an investment, then you're starting that relationship over again in some ways, especially if it's not somebody that you have a long history with. So it's important that you're always in communication, I think, with your investors, and you're always keeping people warm. And whether that's, so like I'll send out a weekly newsletter, which is another way to stay in communication. It doesn't always have to be a phone call, but you need to be staying in communication and keeping people abreast of what you're doing. Because I think the longer the time period goes since the last time they heard from you, I think the less likely they are to invest with you.
That's very interesting. You just gave me the idea. See, there you go again. Why do you have a podcast? I have 59 investors. I used to take them all out to dinner about every third quarter, but then there got to be too many, and so I haven't done a good job, of keeping up with them, although I make monthly payments to these people for years. So I kind of have a 30-day check-in every time that check arrives on time.
Yeah, that's right.
Well, I guess he's doing okay, because
that's right.
My 6 checks for those 6 houses came in again, So, but I think that newsletter is an excellent idea. Just a little chance to talk about what's going on in the market, why you're not afraid, or what you're doing to hedge against some of the fears of COVID or the recession or the interest rates or the inflation or whatever, get real with them, and don't always, be transparent. I know we don't want to talk any negativity, but you can't be all sunshine because then everybody knows there's nothing's all sunshine. You got to have a problem somewhere,
Well, you gotta be balanced, right?
Mm-hmm.
I think with people, nobody, like if you haven't had a bad deal or something go wrong in real estate, right? I've heard others say this, like you just haven't been doing it long enough. And I think that's true. Real estate's about solving problems. If you can solve problems, you can make money. And so you're going to have things that come up. And I think being transparent about that is important and not just trying to gloss over all that.
Well, like I was saying, we've had 300 mortgages. Our foreclosure rate has not moved 1 decimal point. However, the courthouses are closed right now because of COVID. So we got 27 foreclosures out of the 300. They're stacking up. I can't terminate them because I can't get to the courthouse. We're making the payments. We've gone through, and if we get all 27 of these houses back, we're going to make an extra $1 million because these houses have gone up in value substantially.
I'm sure.
You're showing. So like I was giving an example of what I might have said in a newsletter. It ain't all hunky dory. COVID caused some problems, but we're acknowledging them. We're on top of them. There's an upside to the whole thing. We just got to push through instead of trying to tell them, oh, it's all great. Well, it's COVID, damn it. Everybody got affected somehow. You know what I mean?
That is true. That is true. Luckily from what I'm involved in, we were fairly insulated in kind of workforce, multifamily, family housing, but we didn't see a lot of people default. We saw, but we have seen people taking longer to pay. And we've had to work with some people on payment plans. We've had to, do some different arrangements to help people stay caught up. We had to work hard to connect people with other programs, government assistance, charities, churches, to help them pay their rent. So you're right. It hasn't been, it's just been an extra wrinkle that we've had to work through. But like I said, if you can solve problems, you can make money and we've been able to keep collections really current through those other programs and through working with people. Yeah,
my point was that's how you talk in your newsletter. Get real, man. Get real with them because everyone recognizes transparency when it happens. Everyone recognizes bullshit when it happens too. So don't just blow smoke, man, because these people, they wouldn't have money to give you if they were dumbasses, So
that's right.
So treat them with the respect they deserve, and be forthright. Let me ask you this. Do you get down to where there's a select? Well, let me start over. In my experience, people always like to start small and then they start to up their ante. Same thing in the syndication department?
Yeah, absolutely. It's actually, it seems like a lot of people these days in syndication just try to go big right away. And I think a lot of the courses teach people to be 100 plus units or even 200 plus units. You got to go big. You got to go big. I've actually found a really nice niche in that I call kind of sub 150 unit space, where you're avoiding a lot of the competition. You're able to go much more efficiently to direct to seller, or to get like real off market deals. Cause anything over 100 units is almost always going to be marketed by a broker. And so, we found a nice little niche in that pocket, kind of working under where a lot of the other people are trying to fish. We're fishing in a different pond. It's a little less crowded. And, but yeah, I think even with that, there's a lot of truth to the fact that it's just as difficult to buy in some ways more difficult to buy a 5-unit property than it is to buy a 200-unit property.
Banks like to loan millions more than they like to loan 100,000 because
that's exactly right. So if the loan is above $1 million, that opens up a lot of doors. It opens up the opportunity to have non-recourse lenders versus recourse lenders. The process, you can hire professional management, really good management. So there are things to be said about going big, and that's why a lot of folks say go big. But the margins are slim. They're slimmer because the things are higher priced. They're more efficiently priced than being able to find, maybe a seller who's owned it for 15 years and just hasn't raised rent. And we can come in and we know that we can bump rent $200 overnight because they've just fallen behind the market. So it's just different strategies. But yes, I think, with scale does come efficiencies. And what I realized though is scale doesn't have to be in one investment. Like what I saw really work at the private equity firm I was at was because they could buy properties of any size because they had scale at the entity level, at the company level, they had scale. So they could buy a 30 unit, but their purchasing power was related to all of the units they owned, not just that one 30 unit. So I think you can build scale in other ways. It doesn't have to be just buying a 200 unit property. I think you could buy a bunch of 50 unit properties and get to the same goal.
No, that's how I started my storage business because I was small-minded. I didn't know what I didn't know. I had limiting beliefs. I'm buying 20 unit mom and pops, but then they started to mount up in the monthly cash flow. And then I was able to buy some 50 and 80 and 100 unit places. And then, by the time I finished adding on and improving and increasing the rents and adding different sizes to places that had room to expand, I looked up and I had 1,300 doors and I had sold all my small places and I had mostly big places,
Mm-hmm.
But that original question I asked you though, I was talking about, do the investors usually start small and then start to invest bigger and bigger with you?
Gotcha. Yeah. I've seen that.
Do your fund?
Yeah. Especially as deals close, right. And we've given people their money back and most people say, I don't want it back. I want to put it into the next one. I want to keep this rolling. I want to compound this. And so they take not only their principal, but they take their gains and they roll that all forward. And so we start to see those
and
amounts
their confidence
grow.
And they put in some more, right? Then they're a little more confident. That's one thing I love about my private lenders. I don't like my houses to pay off early. I don't like to pay my people off early. But it's always a good thing when you meet a new investor that they get their money, they get the return of their capital sooner than later because it just opens the door wider for the next thing. So, hey, it's true. When I deal with this guy, the money does come back, and you do it, once. So, we're going to go ahead.
I was going to say, that's just the proof in the pudding, right? It gives people a lot of confidence when they see that what you said you were going to deliver actually came back,
So, if you're into some passive investments and you want to talk to Kent, we're going to go to 1000houses.com/K Ritter, Ritter, 1000houses.com/K as in Kent Ritter, Ritter. And that'll get you over the show notes. And over in the show notes, you'll have all the information, websites, phone numbers, anything you need to get a hold of him and have a consult or see what the next syndication looks like and start getting information so you can decide what you think about his syndication. I'm pretty sure the man's not going to put out a syndication proposal if it's not smoking deals because he's been around the block a few times and it'd just be suicide to put out a bad one, and everybody knows that. So
you're only as good as your latest deal. That's the truth.
In my case, I wrote a book called My Life. Well, no, I didn't. Usually it starts with My Life in 1,000 Houses, but I didn't do it on this one. It's just The Art of Private Lending. It deals with private people that loan their money to private people and how you can do that effectively, how you can do it without getting taken advantage of. what kind of deals you need to offer people, and just how to stay out of trouble in that department and proliferate on your own money. And so there's a lot of different ways, but I believe investing in real estate is really my vehicle of choice, because, you know, there's a tangible asset somewhere at the bottom of that pile, you know, and the chances of these things zeroing out are not very good. We've all heard of a million stocks that zeroed out or went under, but the chances of a piece of real estate turning into be worth zero is got to be pretty astounding chance, you know. So I like real estate because of that reason. And so do you teach this stuff to people, or I didn't notice you really as a big educator in this, but are you teaching people how to do this?
You know, I don't have a formal coaching program or anything like that. I don't know. Right now I'm just trying to focus on being really good at finding good properties, you know, and being a really good operator. And maybe at some point I'll get into the coaching game. I've actually had a few people ask me recently, but the way that I educate is in a couple ways. I mean, one is through my podcast, two is through my blog, which is on my website, which is kentritter.com. And then the last one is I hold a monthly networking event where either I speak or we bring in speakers. And in those ways, I'm trying to give back and educate folks. And, you know, that was the reason I really started my podcast.
Keep your focus. Like I wasn't teaching people to do anything until 20 years. I was in the business 20 years.
Yeah.
And I actually did it. I was just bored of the other stuff. I didn't care. And so I still needed to be viable and still have something to do. And so I started coaching, you know, and I'm not a Millhouse, you know, I keep it pretty close to the vest, and I only take people I think I can help, really. You know, if I don't think I can help you all, I don't need the money.
Yeah.
You know, so I'm doing it for other reasons. You know, you may not believe it, but got to be a higher reason to do things. You know, eat and drink so much. At least that's how I feel about it. So, 1000houses.com/K Ritter, KRITTER. Get over there. You can see his blog. You can see his podcast. You can see his websites. You can get in contact if you're interested in looking at the syndications that he's getting involved in and trying to raise capital for. Anything else you'd like to say to the audience before maybe we part ways here?
No, nothing besides, I mean, I think you've already said how to get a hold of me. What I would say is just, I mean, I echo that, you know, real estate investing, particularly multifamily for me has been my vehicle of choice, but it's changed my life. You know, it's allowed me to leave my W-2, allowed me to create a new career and a new passion. And it's just like you said, a lot of people just don't know about it. And I didn't know about it before 2015. And it was incredible when I found out about it. And the thing I hear from a lot of people, first time I talk to them is, oh, those returns are too good to be true. And say they're not, you're just not used to it. You're just only used to what you hear from, you know, the big brokerages and things and stock market returns. And there's just a whole different world out there. You just have to educate yourself.
If I passed on deals where I saw I was going to make 100% rate of return on my money, I'd have passed on a lot of deals, you know, because I was thinking, well, that's too good to be true. I mean, we're in the business of too good to be true. It doesn't happen every day. It doesn't happen every month, you know, but our goal, I mean, like, I don't even slow down for anything if it's not making 15 or 16 or 17%. You know, I don't even slow down. Yeah. I start buying things when the numbers are popping up showing that I'm making 25, 30, 40. And then I stay in those arenas and I keep searching. And every now and then, even a blind dog can find a bone, right? I'll find a deal that makes 50, 60, 80, 100% rate of return. It just comes across the path and lays down there. You know, it's not like I caused it.
It's absolutely possible. It happens all the time. And if you have a good process in place, you'll find those kind of deals, you know. But I think a lot of this business, a lot of the education for me when I talk to new investors is about how really it's not about me convincing them that they need to do this. I feel like if I educate them in the right way, the light bulbs are going to go off just like they did for me. A lot of what I do is help people help people become comfortable making that decision, though, because it is new. It is unfamiliar, and so part of it is about just you as an individual, like you said, getting past your limiting beliefs and being able to be comfortable, making that first investment and getting started. And then I find once people do, and they start to see those checks coming in, like you talked about, I think that's when people really start to understand the power of it. And then you start to have your first deal sell, and you get those returns back. And then that's when people, I think, are really addicted.
Yeah. Now you got a real track record. You can show some real ROI, like this isn't hypothetical. This happened, these are the people that were involved. That's exactly what this book is about. It's just how to get comfortable loaning your money. In your case, it'd be how to get comfortable investing in a syndication. What are they about? How does it work? What are the expectations? So I really appreciate you taking the time to be on. I'd like to tell everybody I was at the ranch, and the ranch had a storm the other day, and I guess it knocked out all my Wi-Fi. So I had to run to this town so I could get some access. So this is why I'm doing my podcast in the back of my truck. This is how I feel about that. It doesn't really matter how you get this information, whether I'm sitting at the Empire State Building or I'm sitting in the back of my truck. It's all about the information. And my job is to make sure that I got delivered today. So I did what I had to do to get the information delivered. So welcome to my truck, everybody. This is Mitch Stephen with the 1000houses.com podcast. I'd like to thank everybody for stopping by to get you some Kent Ritter. If you have a chance, check out livecom.com, livecomm.com, and find out why I'm averaging 4 days on the market in the last 200 houses I sold. And I haven't personally seen the last 500 houses I bought, and I haven't seen the last 500 people that bought my houses. I have a great team, but we're using some technology. Livecom is a big part of it. And I can show you exactly how it works. Just watch the videos on the home screen, and I'll give you just a taste of why I'm being successful with Livecom, livecomm.com. All right. I'd like to thank you, Kent, again, and hope you have a good rest of 2021, and best of luck to you.
Thanks, Mitch. Appreciate you having me on, man.
All right. I'll talk to you soon. This is Mitch. We're out of here.